Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for August 30th, 2016. I'm Frank Ochoa. Here's a look at the daily time frame of the ES. What we have right now is price bouncing off of the lower end of the range here at 2158.5 was our key level from the FOMC day on July 27th. Price dropped into that level, didn't stay there long, and then rebounded here the previous session. We got to bounce off of those 64s and then rally. And basically the idea here was that price was attempting to hold below the previous session's close, could not, eventually began to squeeze, and now we are sitting here at around 2180. That was the idea yesterday, was that we could perhaps see a rally that gets us as high as 83 to 85. We stopped just short of those 83s by coming into 82.25. And now pullbacks likely to be defended today for a shot at continuing higher toward the top of the range at around 87 to 88.5. If we take a look at the intraday time frame, you'll see again we're making our way higher a little bit, but it's not an emphatic move. And as a matter of fact, okay, here's a look at the intraday time frame. But again, one thing you have to keep in mind is this has been a very, very quiet market. Yesterday was just a quiet melt-up type of trend. Today, so far, overnight trading, it's been inside the previous session's range. Very, very modest overlap trading. And that tells you that the market is just very, very quiet right now. I still believe that if we do pull back, any pullbacks, say, into 72 to 70, could be great buying opportunities for a continuation higher. But again, this could be a very, very quiet market as we head into Friday's trading with spurts of volatility. So you have to be very, very careful, play it close to the vest, and keep an eye on your trade management. All right, now if we take a look at the crude oil chart, here's a daily time frame. This one has been moving. Here's a look. This one's been active, obviously, and what we've seen here lately is a big time squeeze, a pullback, and then on this pullback we were looking for some sort of squeeze opportunity. We got the squeeze Friday, but it failed to really push through the previous low here, and that's at about the 48.50 level, 48.55, somewhere in that zone. And that was very, very important when that rejection occurred. It pushed price back downward to 47.25, and right now prices have been chopping around that level. And so right here we're basically coiling up after the recent rejection, and it's anyone's ballgame right here on which way we see expansion. I still believe, given the current trending nature of the recent move, that we still have an opportunity to get higher. The question is, do we come down here and test value first and then bounce? Or are we going to start to squeeze through 48s, 48.5s pretty quickly? We'll see. But right now, again, may not be a whole lot of volatility again today. Heading into Wednesday's market, that's probably when we're going to see a little bit more action. Wednesday's market will bring in the crude oil inventories data, and that could be very, very nice for at least some sort of volatility Wednesday morning. Right now, one thing we were looking at yesterday was just this sloping channel that had been forming throughout the day, and a late breakout here led to a little bit of chop the rest of the session here, and then now we have a push above 47.25. That's very important. Again, that's going to be your early pivot. Failure to hold that level likely auctions prices back to 46.88 with a likely retest back at the previous lows at 46.62. But right now, got to keep an eye on that 46.94. That's the level I had our traders watching most of the day yesterday. Eventually, it got back above it, held, and is now rallying. If that area remains bid, the expectation would be a push back toward 48s. All right, let's take a look at gold futures here. All right, here's a look at gold futures. This one obviously has been rather weak, but it hasn't really gotten to our destinations quickly, if at all here right now. We were looking for some sort of move higher to the tune of about 60, 70 handles. We got it. And then once price failed to hold up here, the expectation was that we likely come back across the range. The problem is, we started strong the first day and then we went sideways for a couple of weeks. And that's right where bears came in to defend and absorb off this zone, eventually overwhelming the bulls at 1334.30. And now we're seeing some weakness here. But it's taken a long while for this thing to go. The idea all along was that we come back into this 1306 to 1310. From there, bulls would look to return prices back to 1370 to 1380. The only question is, have we already found our low? Because before we found a low right here. Obviously, this was the squeeze. Here's the low. Then this was higher lows right here, and then it rallied. And now we're seeing, again, higher lows right here. Could this be the spot where it goes higher? We'll see. There is an absorption signature that is developing. We have previous lows here. You have a rejection tail here, and now tonight's overnight trading action and pre-market trading action has us right there. And we just opened for RT8. So far, this looks like a modest absorption signature that could be developing, but I'm on the fence right now. I really am. I think it's a much safer bet to see if it'll dip down in this zone and then watch it from here. Look to play it back up toward 1370. So we'll see. This could be the short-term little absorption signature that leads to a bounce, but I think it's a safer bet for this major LVN to be reached first. All right, let's take a look here at the NQ now. All right, here's a look at the NQ. I'll zoom in right here. This one right here, obviously, the key level up here was 48.20. We talked about it before. We had a trading range. We pushed above it. As soon as we failed, before it failed, I said if it fails, it'll auction back across the range. And that was 47.90 to 47.85. We had targets there. And then look at price rally right back up to 48.20 and then fail again. That's pretty significant. And now we have a 3-day inside day range that's developing. Again, the market could be very, very quiet, especially so this week, last week of summer. And then we have NFP report on Friday, which the market is likely saving all the bullets for that day. So we'll keep that in mind. But right now, you can see 46.80, or 47.60 is very, very important. 47.30 and 46.80, these are all key levels here. And given how strong the tech has been in general, and given how strong the NQ has been, I still believe all pullbacks are likely buying opportunities, especially at those key levels. So right now, we'll keep an eye on this double inside bar pattern. We could see some nice expansion from there soon. Here's a look at the intraday right here for the NQ. Trading around the previous week's close still, which is 47.83. 47.60 still a big time key level here. This is your pivot, 47.83. That's the previous week's close. A little below it, mostly above it. Right now, it just came below it only for a little bit. So this is going to be the key level to watch. Above this level, squeezes to new highs between 48.05 and 48.10. Failure to hold this level, auctions prices back to 47.60 to 47.57. So that's going to be a key level to look to defend if you're a bull. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck, trade well, and I'll see you soon.